Yeah, hi.
Yeah, hi. So, first, let me introduce you and then we can start. So, hi everyone. First of all, thanks for taking your time out from your busy schedule. We at Altport Experts India, we are thrilled to announce our brand new show, which is Ask the Expert Show. Through webinars, we aim to share insights into diverse asset classes, forecasting knowledge, uh, exchange amongst our investor community. So, my name is Devanshu Mindlish, and I am the Vice President of Altport Experts India. With me, I have speaker Mr. Rahul Jain, who is head of public markets at Alt. So let me take a moment and introduce Mr. Rahul Jain. Rahul Jain is a seasoned investment professional with 13 years of experience. His experience includes $350 million fund at a single family office in the Middle East, investing globally across asset classes, focusing on REITs, bond, equities, and other alternates. Previously, he has worked with Deutsche Bank and Standard Chartered Bank. Also, at Alt, Rahulji heads the public market division looking after PMS products. He holds BTech in electrical engineering from IIT Bombay and MBA from IIT Lucknow. IIM Lucknow, sorry. So that's how it is, and along with this, he has cleared all the levels of CFA from US. So hi, welcome, Rahulji.
Thank you, Devanshu. Glad to be here.
Yeah, hope you're doing well. So if you can
All
take us through your presentation and
sure.
on that would be
So,
great.
sure. So, I'll quickly run through the presentation itself and then next 10 15 minutes, and then probably we can deep dive into Q&A, whichever questions. I believe all the interested participants can put in their questions, and at the end of the presentation, you can ask all the questions. So, yeah, without further ado, thanks a lot for the introduction. So I'll quickly start off with our deck, few slides which I prepared. So to give everyone some context, essentially the idea of the presentation was about alternative investments, specifically about real estate. Within alternative investments, obviously there are a lot of sub asset classes like gold, commodities, private equity, private debt, VC, crypto. Real estate is something which we'll talk about, real estate and infrastructure. I mean, people have been, some of the asset classes are fairly new, like crypto, VC, etc., which have only come in over the last couple of decades. But I mean, originally, if we were to talk about, let's say, 20, 30 years back, uh, investors used to just talk about either gold or real estate, which in fact, if you see in India as well, even till today, these are the two asset classes where a bulk of the monies go in, right? So we at All Capital have been in the business of enabling investors to invest in alternative real estate uh, through our earlier fractional ownership platform, and now via SMREIT and AIF, etc. We currently have manage around $250 million across all our different asset classes. And we have recently launched this product, which is all pre-invite portfolio strategy, which is under a PMS structure, where essentially the idea is to give investors a regular return on REITs via REITs and REITs, and of around 8 to 9%, and IRR of close to around 12 to 15%. So I'll quickly run through what basically REITs and REITs essentially help you. This product helps you. Essentially, they REITs and REITs help you investing in, give you current income of close to, let's say, 8 to 9% on a blended basis. You get access to institutional grade real estate as well as infrastructure, because all these listed REITs and REITs primarily invest in high quality real estate. Like if you talk about Mumbai, you have your BKC, one BKC, First India Financial Center, so on and so forth. If you talk about Bangalore, you have assets like Manyata Tech Park, Embassy Tech Village. In Delhi, you have your Bhakti Airtel building, the Worldmarks, etc. So good quality assets. Obviously, this is SEBI regulated, where REITs and REITs they fall under SEBI's regulations. Then the good part about REITs and REITs, essentially you get quick liquidity with T+1 settlement as compared to, let's say, if you invest in real estate, it takes, let's say, couple of quarters for you to exit, right? This really helps you in quick liquidity. You decide to sell, you think the valuation is right, you sell, you get your funds the next day. It has a very good diversification benefit if you compare to equities. The last 1.5 months is an example where equities have not performed, while REITs have gone up 15%. Last 1 year, equities have been down, but REITs have been up around 20-25%. And obviously, these have a lot less volatility because underlying cash flows are stable, because of which the valuations don't really move a lot, as compared to in case of equity, where PE compression and earnings going up and down really create volatility in equities. If I talk about returns, so Nifty launched the REIT InvIT index in July 2019. Since then, over the last 6 years and 1 quarter, Nifty REIT InvIT index has given 13% return, of which a little above 8% is the yield, while almost 5% is capital appreciation. So when we talk about the returns, it's essentially you get much better regular yield as compared to, let's say, the other asset classes like Nifty 10-year GSEC index have included fixed deposits, MFs. You are getting better yield. Plus, you get a capital appreciation of almost 5%, which is again similar to the inflation. If you look at over the last six odd years, your inflation has always also in the similar ballpark. So that kind of is almost similar returns with a lot less volatility. And I mean, if you compare it to equity as well, the return is almost similar to that with a lot less volatility. So on a risk-adjusted basis, it gives you fairly good returns. When I plot it over the last 6 years, you get a sense in terms of how volatility impacts. In case of equity, if you see the ups and downs a lot higher, the drawdowns and even the max upside is also a lot higher as compared to REITs, where it's a lot more stable. In terms of returns, it has given almost similar returns. Like I said, you get high quality assets. REITs today have 175 million square feet of assets under management, which is ballpark around just 20% of the grade A real estate, which is close to around 850 million square feet. So there's a lot of more real estate which can go in these REITs. There are 5 listed REITs currently, 2 which are in various stages in terms of getting licenses or filing offer documents. Market cap of $20 billion, which is just like 0.5% of the $4 trillion market cap which India has, which is much lesser as compared to, let's say, in developed markets where REITs form close to around 2% of the market cap. So there is a lot more REITs which can get listed, more assets which can become part of these REITs itself. Then if we talk about InvITs, which are basically infrastructure trusts, where essentially a lot of infrastructure developers, they basically pool together infrastructure assets like toll roads, power assets, power transmission, power generation, telecom assets, and then listed on the exchange, through which investors can get good yields of 10 to 15% and a regular capital appreciation over long term. So today, as things stand, there are 5 listed REITs. Alpha Alternatives list IPO closed yesterday, which will get listed in another week's time. So you have 6 listed InvITs as well. Total market cap of $4 billion. There are 26 registered InvITs, of which, so essentially around 20 are unlisted, 20 are private InvITs, and total AUM which they manage is close to $80 billion. When I talk about SEBI regulation, why these REITs and InvITs give regular income, essentially by SEBI regulation, they need to distribute 90% of the income which they generate. They need to invest also in only rent generating assets, income generating assets, of which 80% is the minimum limit which they need to put in. But if we talk about actual on a regular basis, close to most of the REITs and in REITs have more than 90% of the value in income generating assets. Talk about leverage, there are strict leverage limits as well to keep the risk low. In terms of distributions, they pay, while by regulation they need to pay half yearly, they give income on a quarterly basis, all the REITs and REITs. And I was talking about liquidity on trading, average trading volume is close to 127 crores over the last quarter. This is from July to September. This liquidity is, in fact, the trading volume is increasing on a regular basis. I did the same analysis 3 months back for the April to June quarter. The trading volumes was close to around 85 crores. So the volumes have been increasing. In fact, with the new SEBI recategorization of REITs into being classified as equities, the volumes within REITs are expected to go up considerably, given that a lot of passive monies will flow in. There are a couple of REITs which can actually be part of the mid-cap index whenever the new rebalancing for mid-caps come in. So that will basically increase more volume, which will basically make it more attractive for any investor to come in case of REITs and REITs. And lastly, what is very, very attractive about REITs and REITs is that they give a lot better returns on a post-tax basis. If an investor today, FDs are not giving you 8% return, probably even with senior for senior citizens, for any scheduled commercial big bank will give you, let's say, 6.5–7%. The entire income is taxable in investors' hand, which basically drops the post-tax yield to below 5. In case of REITs and REITs, the way the distribution is given, and there is special separate clause for such trusts. Typically, for an 8% income, when we did an analysis for the REIT index, ballpark, the post-tax income for investors will come to around 7%, which is a lot higher when you compare it to any FD or debt mutual fund in that context. When I talk about why REITs are in general attractive, obviously India is the GCC capital, the global capability capital of the world. The number of occupiers or the tenants have been increasing at a very rapid pace of 6.5%. When I talk about 1.5 decade back, there were only 700 GCCs. Today, there are more than 1,700 GCCs, which is expected to go to 2,100. The primary driver being the operating cost of an employee, of the entire desk space, etc., the rental, etc. That is just 1/5 of that in a US Tier 2 city, which makes it a lot attractive. And when you talk about all big MNCs, all big S&P 500 listed companies have their GCCs in India, right from Microsoft, Amazon, Apple, etc., to all the big banks like Goldman Sachs, Citibank, JP Morgan, etc. When we talk about REITs, of course, since Modi ji has come in more than a decade back, the infrastructure spending has gone up. A lot of this infrastructure spending government is doing, and then obviously a lot of these monies are coming in REITs. Like I said, there are 6 listed in REITs. Another 2 to 3 are expected by end of this financial year, and by the end of next financial year, it is expected that there will be more than 12–13 in REITs. All this money which is coming in, essentially, which government is spending on infrastructure, is basically flowing in. The capital unlocking is happening via the listed markets. So we at Alt will curate a portfolio from this from REITs and REITs, essentially where we'll select high quality 7 or 8 REITs and REITs, and then through which we will be able to provide higher risk-adjusted return. If we talk about an illustrative model, one can expect a 8% entry yield over a 4-year period. You can expect this yield to come down, which essentially means a capital appreciation. So we are targeting IRR of close to 12 to 15% over the 4-year period, which basically means over a 4-year period, you can expect 60% on an absolute basis in terms of the returns. From fee standpoint, we are charging a low management fee of 0.8 to 0.4% depending on investment ticket size, and performance fee of 15 to 10%. If we compare it to equity PMSs, obviously this fee is a lot lower, where equity PMSs typically have a fee structure of 2% plus in general. If I talk about us, I was mentioning that we have been in the business for almost a decade. We are leading tech-enabled alternative investment platform in which Westbridge Lightspeed has backed us over the last quite a few years. We have an investment experience of $3 billion, 35 years of cumulative experience. We have an AUM of $50 million, and we have distributed capital via regular distributions or unlocking or sales via close to $28 million. We were also in top 20 global fintech by CNBC in 2023. We also listed the first SM REIT last year. So SM REIT regulations came in March last year, post which we got the first license and listed the first SM REIT, which was 350 crores. In fact, I was running the transaction there itself. And then we listed the second SM REIT, which got listed on 4th August this year, which was again a 473 crore transaction. We have other, like I was mentioning, the earlier fractional ownership platform, we have around $110 million, which will migrate into the SM REIT business itself. 2 listed SM REIT schemes. We have UK assets where we are housing investments and a couple of AIF schemes, and we are going to launch a third AIF scheme in a couple of quarters as well. The team, Kunal Mokta and Hashim are co-founders. They were IMA batchmates. Kunal worked with Blackstone for 8 years from 2007 to 2014, post which he started this firm along with Hashim. I joined them in 2019. Since then, I've been working with them on various businesses which I've mentioned. Sandeep handles our operations, Amit fundraising, and Shashank assists me in the investment decisions. We have a advisory board where we have former chairman of SEBI, CV Bhave Vikash, who was earlier CEO of Blackstone REIT, Embassy REIT, and Ben Casey looks after UK business, and Altport primarily consisting of our investors. That's pretty much it. Thank you everyone for your time. I'll quickly take up any questions which you have posted.
Yeah, thank you, Rahulji. It was a pleasure listening to you, and I think we have got a lot of insights about how PMS and AI in place of PMS we can create REITs portfolio. So what is your market outlook? If you can throw some lights on market outlook, then it would be great.
So if we talk about specific to REITs and REITs, of course, in general, if you look at from longer term perspective, like I said, REITs and REITs over the last 25 quarters have given a 13% sort of cap return. I expect that the returns will be in a similar range. If let's say someone was to go and invest in the index today, you can expect, let's say, 11 to 12% sort of a return any which ways, because you typically get around 7 to 8% sort of capital appreciation, and then 3 to 4% sort of 7 to 8% sort of distribution yield, and 3 to 4% sort of capital appreciation. Given that REITs have run up significantly, a couple of REITs are at overvalued levels. I expect if one were to invest in index, you can expect, let's say, around 11 to 12%. if someone is managing it actively, who has a pulse of where the market is, you can bring these returns up to around 14 to 15% as well, given that you'll allocate funds to, let's say, undervalued REITs and REITs. So that's essentially what I expect. From an overall market standpoint, since the SEBI reclassification has happened, REITs have gone up significantly. REITs have gone up close to around anywhere, depending on REIT to InvIT, anywhere between 20 to 15%, while the underlying cash flows have remained similar. So I expect that this euphoria will kind of die down. There are still pockets of opportunities in a couple of REITs which are still not that overvalued. And InvITs in that context are a couple of InvITs, both on the power transmission side and road InvIT side, which provide really good value, where there are yields close to around even 12 to 15% as well, and capital appreciation potential of around, on an IRR basis, IRR returns close to around 12 to 13%, which we expect.
Okay, so thank you, Rahulji, for coming on this call. Thank you, our investor community, for joining on this call from your valuable time, from your busy schedule. We will continue to do these webinars in future. If you need more details, you can reach out to us at www.aifpms.com, and you can even email us at devanshu@aifpms.com. Thank you, everyone. Have a lovely day. Take care. Bye.